Hi there, welcome to the Stockscores Market Minutes for October 4th, 2013. This week I'm going to talk about abnormal activity, what it is, and how to scan for it using the Stockscores Market Scan. I have found that most stocks that make significant gains, and by that I mean consistent market-beating gains in a longer-term trend, start their market-beating trends with abnormal activity. Now, when I say abnormal activity, most important is abnormal price gain, but it's even more important when that is accompanied by abnormal volume. Now, this weekend, I did a search of the US market looking for the top performing stocks of the last 3 months. And I ranked those and went through the top 25, and just about every one started their market-beating trends with abnormal activity. Now, as an example, here we have a stock GNVC. Anywhere that you see a purple dot on this chart, there is abnormal activity. So there's abnormal price gain with abnormal volume. So in this case, you can see that there are 3 purple dots, but notice that the start of the uptrend, which was in early September, started with that abnormal activity, and this stock ultimately gained 358%. Here's another example, BCRX, and again, abnormal activity in July. There's our first purple dot. It was followed by 2 more, but that set off that market-beating trend where the stock went from a little over $2 to its current price of $7.35, a gain of 353% over the last 3 months. One more example, CPRX, you can see we have this situation where the stock is boring and quiet and then has the purple dot break and a big jump, and that happened way back last April. And then it did it again in June. Not great follow through on that one, but the important one was in July where we had that break through $1 with abnormal price, abnormal volume, and today that stock is at $3.28. Now what I want to show you is how I find these using the Stockscores Market Scan. It's a tool that I developed, and the primary purpose, it has many different filters, but the most important filters in the Market Scan are those that will search the entire market for statistically significant abnormal price and volume activity. So I'm logged into Stockscores now, and I've gone to the Market Scan. I do that by going to Tools, selecting Market Scan, and I can now select under the Price Filters area this filter right here, which is abnormal activity, and I can tell it to tell me all the stocks that had an abnormal day up on the last or current trading day. So because I'm doing this on the weekend, it would be Friday's trading action. So let's look for all the stocks that had an abnormal day up on Friday, and let's also select abnormal volume. Now I like to also filter for liquidity. I don't want stocks that hardly ever trade. So I'm going to say stocks that have traded at least 200 times a day. Now typically when I do this scan, I'll do 200 times a day for Canadian stocks and 1,000 times a day for US stocks so that I don't get too many examples at one time. Now I could also select exchanges if I wanted to up at the top. I could tell it to only look at the American exchanges or only look at the Canadian, but I'm going to leave it as it is, run the scan, and it found 51 stocks that made statistically significant abnormal price gains with abnormal volume. Now here's something real important to understand. Almost every stock that makes market-beating trends starts with abnormal activity. However, not all abnormal activity leads to market-beating trends. And so we need to have a way to further filter through our list of, in this case, 51 stocks to determine which ones are the very best candidates. And I'm not going to go into all the details. Those are things that I teach in my trading courses, but I'll give you some of the basics today. The first thing is I only want to look at stocks that are abnormal for the first time. In other words, for example, this first stock, SOPW, started behaving abnormally in mid-August when the stock jumped up to 12 cents. Now today it's having an abnormal day as well, but we're already well into the upward trend. So in this case, it's a bus that has left the station. I don't want to do those. The other thing I want to eliminate are the stocks that are in steep downward trends and are going to be fighting against pessimism. So this stock is a good example of that, Zoom Technologies. You can see that the stock is trending lower, and as a result, any strength that happens will likely be met with selling pressure because all of the people that bought recently up in this price range are looking to get out and break even. And so that can really put a cap on the stock. Now if we go up to the previous one, we actually have a much better chart. Here's a stock that is breaking from sideways trading. It's our first show of abnormal activity. It's showing rising bottoms. That is a sign that there is optimism. And it made that big price gain on big volume through resistance from optimism. That stock has a high probability of going into a market-beating upward trend in the months to come. All right, let's get into this week's analysis. S&P 500 is in that upward trend, and I'm going to put a bullish rating on the S&P 500 this week because we have pulled back to the upward trend line. So this time I'm actually going to draw it. Not a very good drawing tool here in PowerPoint, but you can see that we bounced off of the trend line that was formed by these 2 points, and this week we hit that trend line. And if I drew this a little bit straighter, you would get a real sense of how we have bounced almost exactly off of that upward trend line. And that is a strong sign that the market will continue its upward trend, probably stall at resistance here, but ultimately break through that. So because we're at the upward trend line, because we're bouncing off of it, I think the market is likely to continue higher in the weeks to come. The caveat on this is this whole debt crisis thing. The last time the debt crisis thing happened, I'm going to say a year or two ago, we had a short-term break through the trend line, then it came back once the problem was solved. So if Congress and the Senate don't get their act together and get this problem solved, we could see a break down through this trend line, and that would be bearish. And so certainly watch for that. What's probably going to happen is we're probably going to bounce off of this, but if we don't, if we break that upward trend line, then I would recommend some caution. Although there is a longer term trend line that sort of goes something like this, that gives us some support a little farther down. All right, let's move to the TSX 60. It remains under resistance. We've got rising bottoms on the chart. You can see here a rising bottom there. Whoops. Rising bottom here, a rising bottom here. That is a sign that there's optimism building, but we are stuck under that resistance point, and until we can break through that 1870 mark on the TSX 60 ETF, T.XIU, I remain neutral, but I certainly like how things are shaping up for the Canadian market. 20-year Treasury bond ETF representing U.S. Treasuries broke its downward trend a few weeks ago and has been building a rising bottom right now, but until it breaks from a rising bottom, I wouldn't get too optimistic about it. I've got I would say a neutral rating on the Treasuries right now, which is better than the bearish rating that we had up until mid-September. But it does look like interest rates have stopped going up for the short term. Of course, if this chart is going down, then interest rates are going up. That's the inverse relationship between bond prices and interest rates. So this chart is telling us that interest rates have at least stopped going up for the near term, and they could actually start to go down if we get a break higher on this ETF, the TLT. So this is a good one to watch if you're thinking about getting a mortgage or something like that, because even for Canada or anywhere in the world, a lot of interest rates depend on the US Treasury bond market. This is the chart of the China Index Fund. It too has pulled back to its upward trend line and bounced off of it this week. And so I expect strength to continue in the FXI in the Chinese market. Unless that upward trend line is broken, I would be optimistic about the Chinese stock market right now, which is helpful for markets like the Canadian market, which is heavily dependent on commodities, which of course go up when the Chinese economy is strong. Emerging markets, a very similar sort of situation. We've bounced off of the upward trend line, haven't really broken that cycle of falling tops. So this particular chart, the EEM Emerging Markets ETF, goes beyond just China. It includes many of the emerging markets in the world: Russia, India, Brazil, that sorts of things. It's a basket of emerging markets. And so we're seeing general improvement, but I wouldn't say all-out optimism just yet because we haven't broken that downward trend line. US dollar broke its downward trend line on Friday, and that's important because it recently broke through that long-term support. We talked about that in recent weeks here in this video. I think that we'll see a little bit of a bounce back in the US dollar, which is somewhat negative for commodity prices in the short term, but really the cycle right now in the US dollar, the chart is falling top, falling top, falling top. So we've still got these falling tops. That's a sign of pessimism. And so I therefore remain bearish on the US dollar longer term, although in the short term I think we could see a bounce back. Gold is remaining in that downward trend and really can't break the pessimistic cycle. With the weakness in the US dollar over the last few weeks, we would expect that gold would go up because it usually has an inverse relationship to the US dollar. The fact that it hasn't is a further indication that the market globally just doesn't have that interest in buying gold anymore. And until we get those trend lines broken, I would remain bearish on gold. Oil is coming to a intersection of two trend lines. We've got the upward trend line in green, the short-term downward trend line in red, representing that pullback. We've pulled back to the longer-term upward trend line. We should bounce. The likely outcome for oil is to break to the upside through the $25 mark on the OIL ETF. But until that happens, I would say I'm neutral. I think there is an optimistic side and neutral to this chart because, as I said, it is more likely that the long-term trend will prevail. We'll bounce off of that green upward trend line and continue higher. And that's more now motivated by global expansion and improving economy than it is by things going on in the Middle East. The fear index is in a downward trend. We've seen a little pop up this week as people start to get worried about the debt problems in the United States, but it hasn't broken that downward trend line, and so I remain, I would say, bearish on fear, which is another way of saying I'm optimistic, I suppose. But unless that downward trend line is broken, I wouldn't worry too much about the market's concern for something big happening, something very worrisome happening. It is somewhat noteworthy to note that we are flirting with that downward trend line, and if we drew it a little steeper off of the last top, we'd actually have broken that. And so you can see the obvious concern that the market has for what's going on with the U.S. debt crisis. There is that concern that what if the U.S. actually does default? That would be catastrophic to the global economy, and that's why we're getting a little bit of an uptick in fear. Most people think that is highly unlikely, and certainly the market agrees, and that's why the VIX is really not all that high right now. All right, so my outlook then, I have gone back to bullish on U.S. stocks as I think it's likely to bounce off of that upward trend line. The caveat there is the short-term problem with the U.S. debt crisis, which is to be solved sometime in October. And so we could get some real volatility around that trend line, and it could shake some people out of that bullish stance. But I look at weakness being an opportunity to buy stocks because I really don't think that the U.S. is going to default in their debt. No one's that stupid in the United States. Canadian stocks are neutral with an optimistic bent toward that. Bearish on gold, oil neutral. U.S. stocks have fallen to their upward trend line, which should be held. As I said, exercise caution. If that trend line is broken, you can check it on a daily basis on Stockscores. Symbol SPY is what I look at. Canadian stocks are slowly building optimism, but need to break through resistance. Gold remains in a bearish trend, while oil is bouncing off of its upward trend line, but needs to break the pullback to get back to bullish. Well, that has been the Stockscores Market Minutes for October 4th, 2013. Have a great week in the market and trade well.